Coming up on Your Money and Your Life, understanding insurance and protecting your family if the unthinkable happens. Stocks to buy when the share market crashes. How the Bank of Mum and Dad is helping a generation get into the property market. Plus, we find bill relief for heart transplant recipient Michelle and her husband Steve. G'day and welcome to Your Money and Your Life, the show that's all about saving, spending, investing and enjoying your money. My mission is to make sure you make the very most of your money, that you're getting the very best deals on everything from home loans to credit cards and petrol. First up today, we're looking at income protection insurance. If you have debts like a mortgage and kids or other dependents, you need to protect them from the unexpected. Just think, how would your family get by if you're out of the picture and can't work or require treatment or permanent care? Many people underestimate the amount of insurance they need, or even worse, don't have any at all. To find out where you should start, I'm joined by Naomi Rosenthal, financial advisor with Professional Wealth Services. Naomi, this is so common. People get caught out when life throws them a curveball and they can't work and their income gets interrupted. What can you do?
You can design an insurance package of personal insurances to cover those sorts of events. Life insurance, total and permanent disability, so that's if you can never work again. Trauma insurance, which covers a whole range of critical illnesses. And then the main one for protecting your income protection. Some of these can be funded through superannuation and some of them you can fund out of your own pocket.
Do you find people are generally fully insured for this, or is this something that is just out of mind for everyone?
Broadly out of mind for a lot of people. They might, you might have life and total and permanent disability cover inside your superannuation already that you don't even look at or don't even know you have. But broadly, people don't sit and think about what are the risks, what's going to derail my plans, how can I protect myself from various events and get the protections and covers that we need.
And your income and your cash flow, that's your lifeblood, isn't it?
Critical. It is central to you living a great life.
Apart from not having the cover, what are the biggest mistakes you find clients make when they do take out the cover? What are the traps to avoid?
Not thinking through the actual needs and under-insuring themselves, over-insuring themselves, taking out way too much cover and therefore overpaying for something that they don't really need. And also not getting a full package of insurances, just taking one component of a coverage, so for example, life insurance, and forgetting about the other types of covers that are going to support you if you're not dead, but you're ill or injured.
Gee, it's an important reminder. Naomi, thanks for bringing us up to date on it.
You're welcome, David. Thank you.
Now to Kochie's Budget Challenge. Every week, with the help of the team at Compare the Market, we help real families find better deals on their biggest bills and hopefully save them thousands of dollars. So let's meet Michelle and Steve. Michelle and Stephen are facing some major challenges. Michelle had a heart transplant and is recovering from breast cancer. Health expenses have left a huge dent in their family budget. So let's see how we can help them out. Michelle and Stephen, thanks for having us. What a magnificent spot you've got here. It's so serene, and the hearts behind you, pretty significant.
They are. Actually, I just had my a birthday on Saturday, and I also celebrated 9 months of having my new heart with my heart transplants.
Wow, you're looking great though. It is amazing, isn't it, that transplants just work so well in this country. Our medical teams are incredible. How have you had to adjust your life to the different financial circumstances?
Well, effectively, Michelle hasn't been able to work for the last 2 years, so really that's taking an income out of the family's reservoir, so to speak. So we've had to stop and reassess our priorities. We always wanted to push hard on things like the mortgage, but we've had to ease up on that.
How have you two coped?
She's a woman of steel. She's absolutely phenomenal in terms
As
of
all
her,
partners are.
Yeah, in terms of her resilience and tenacity. she's been an absolutely strong as, and she's always had that capability. I suppose it's safe to say there has been vulnerable moments, haven't you? Where we've both looked at each other and thought, what next? What is next?
Michelle, tell me your financial goals.
I suppose we're at that point where we want to hold our assets, really, because with the medical expenses and me not working, it's getting to the point where we don't want to sell off assets to be able to just make ends meet and keep a cash flow going.
And every dollar counts, doesn't it?
It does. It really
well,
does.
Let me tell you, we've been through your bills. We reckon we've found maybe a little pot of gold for you. So let's go and talk about it.
Fantastic.
Okay, sounds good.
Thank you.
After the break, what to buy when the stock market crashes. Welcome back to Your Money and Your Life. It is time to talk shares. Today we're looking at stocks to pick up when the share market crashes or has a big pullback. Markets always go in cycles. They have their ups and downs. So what are top quality companies with great fundamentals that could be a bit expensive today that you need to put on your watch list for the future? I'm joined by Mark Morland, co-founder of Team Invest. Mark, you loved it. You often say to me, you know, shares will always pull back and there are opportunities.
That's right, you need patience.
Yeah.
It's probably the greatest asset you can have in investing is to be patient. And if you buy well, it absolutely sets you up for fantastic returns over time. At Team Invest, we look for 15 to 20% average compound. And what I'm going to do is go through some companies with you that are probably doing that now, but with a pullback, it will give you even greater returns.
Okay, all right. What's your first one?
You can guess which one I'm going for. Mineral Resources, which is a Team Invest favourite. It's probably our largest single holding. Quality company based in Western Australia, brilliant founder, and we're looking at a price of about $50 for that. It's down from a high of 90 already, and largely that's because of the drop in lithium prices.
Yep.
But if you look at the business going forward, it's still an outstanding business. Technology One, another outstanding wealth winner for Team Invest, and I'd put a price of $9.50 on that, and it's currently $16 plus. And is it likely to happen? Yes, in a market correction, because everything comes down when you have a market correction by definition.
And Mark, your final stock?
Final stock is Pro Medicus, code PME. I think it's clearly Australia's top technology stock. The returns over the last decade, I think, are in the thousands. Wow. So it's not hundreds, it's 1,000 bagger. Astronomically successful, 35% EPS growth, global business in radiology imaging and so on, in interpretation of that. So it's not it's an easy business to run. And if you could buy it at about $55, that'll give you a 30% return going forward per year, we believe. So quality business, and that rounds out the three.
Okay, all right. So stocks to put on your watch list for a pullback in the market: Mineral Resources, Technology One, and Pro Medicus.
Are all super reliable.
Mark Morland from Team Invest, thanks for joining us.
You're welcome.
And if you're interested in share investing, I host a daily show, The Call, on the Ausbiz streaming network, where I put 10 stocks suggested by you, the viewers, to an expert panel for their views on whether to buy, hold or sell, and Mark is a regular on that panel. Later this year, millions of Aussie workers can look forward to more take-home pay thanks to the government's Stage 3 tax cuts from July 1. It's exciting news for some, but there's something else you'll need to look out for when you lodge your tax return. It's called the Medicare Levy Surcharge, and you could be stung if you haven't taken out and maintained an eligible private hospital insurance policy for the full financial year. An extras policy on its own just won't cut it. It applies to all singles with a taxable income above $93,000 and to couples with a combined taxable income above $186,000. The good news is it's not too late to start saving on the MLS. The levy is applied daily, which means if you take out an eligible hospital insurance policy now, you could stop the levy accruing any further in the lead up to June 30. Visit comparethemarket.com.au or speak to the experts to compare policies today. After the break, how to manage the bank of mum and dad. Welcome back to Your Money and Your Life. Well, rapid interest rate rises and sky-high property prices are making it tough to enter the property market for the first time. As a result, we're seeing more and more young people turn to the bank of mum and dad to help them enter the housing market. To find out more about this trend, I'm joined by financial wellness coach Betsy Westcott. Betsy, good to see you again.
Good to see you.
How significant is the bank of mum and dad?
Well, it's fast becoming a real competitor for our everyday banks in terms of size and volumes of transactions and support that they're providing. So the Bank of Mum and Dad refers to when, as you say, young people turn to their parents for financial support in order to get a foothold into that property market, because once upon a time you could go and get a good education and a good job, and that would afford you quite literally a foot in the door to the property market. But given, in the 90s, the value of the average home was 2 times your average wage, but today that's 6 times your average wage. It's taking people a long time to accumulate that deposit and the savings, and they're turning for their parents for either a cash gift or a guarantor that can help boost their deposit or their borrowing power.
It's a great help, and it comes in a range of different ways. What are the risks associated with the Bank of Mum and Dad? First of all, for the kids, and then for mum and dad.
Yeah, so having really open and honest conversations around the expectations is one of the things that people kind of overlook. And the risk there is that people think, oh, this is a gift from mum and dad, I don't have to pay it back. And there's an expectation from the parents that they will pay it back. So they've got a loan to pay to the bank, and then a loan to the bank of mum and dad to repay. There also might be some behavioural expectations. Well, we lent you money, so we get to have a say in what you do with the house, or things like that.
So you really need to sit down with your mum and dad and say, look, really appreciate the help. What are your expectations? Do you want us to pay it back? Are you going to get narky with us every time we take a holiday because you go, well, you could be paying that money back to me instead?
I would love it if everyone had that conversation up front, because I think it just saves so much heartache, so many misunderstandings and potential conflicts down the line. For the parents who are lending this money, there are risks around, say they've gifted this to their child and that child's partnered. If that relationship doesn't work out, there's the potential for those funds to be divided in the separation of assets, and that wealth then leaves the family. So talking about and getting advice on things like binding financial agreements is a really prudent approach if you want to protect that generational wealth. If they're providing something like a guarantee where they're saying to the bank, look, our son, daughter is borrowing this money, but if they fail to make their repayments, we'll step in and make those repayments, or we'll put up an asset that we own, which is often the family home, and that will provide security for the loan. Now, if something goes wrong, then that is risking their income, risking their family home, and can create financial stress for the family. So it's so important that we have not only the conversations around expectations, but you actually seek independent financial and legal advice so that you can really understand all the different scenarios that could play out in the event that it goes right and in the event that something goes wrong as well.
Betsy, great advice. Thank you for that. For more, Betsy and I produced an online course on fighting financial stress. Go to Cuppa TV to find out more.
Buying a home or investment property for the first time is exciting, but the process can be really daunting. So you feel on top of it, here are 4 key steps you need to know. Step 1, apply for pre-approval. This means going to your lender and getting an estimate of your borrowing capacity, so you're prepared when you do find the right property. Choosing an online lender like Wealth makes the application process seamless and simple. In fact, it can take just 15 minutes. 2, secure your property. Do a property inspection and check your contract terms. Your lender will also do a valuation to make sure you can afford what you're hoping to buy before moving forward to a full approval. 3, engage a solicitor to review your contract before going unconditional. They will guide you on paying a deposit and completing stamp duty forms if needed. Step 4, settlement. Pop the champagne. Your lender and your solicitor will work out the settlement time and get those house keys into your hot little hands. To see how we can help you secure a loan at a competitive rate, head to WLTH.com to find out more.
After the break, we return to Kochie's Budget Challenge and how we've helped Michelle and Steve keep more money in their pocket. Well, let's return to Michelle and Steve, a remarkable couple dealing with life after Michelle's heart transplant. We've gone through their bills with the experts at Compare the Market to find better deals to help them get back on track. All right, Steve and Michelle, make every dollar count.
Yes.
And live a little. Let's start with your big bills. Home loan, first of all, paying 6.63%. Pretty good rate, but the team at Compare the Market reckon you could get as low as 6.04%. And the investment loan that you've got, 6.61% down to 6.14%.
Okay.
Do a bit of refinancing. You could reduce your repayments by $740 a year on the home loan, $340 a year on the investment loan. So that's a pretty good start.
Yep, that's good.
Great start.
Yep.
All right, the car. You've got a few cars here at the moment, costing you roughly about $4,000 a year in car insurance when you add them all up. Let's take the Kia as one example. Cover costing you about $1,200 a year at the moment.
Yep.
We found quotes for agreed value cover starting at just under $900 a year, and market value starting at just over $800 a year.
Okay.
You could be $300 to $400 better off in terms of premium.
Yeah, that's a help.
If you shop around for that, which is good. And that's just on one car.
Okay.
And remember, all of these are just thought starters. Home and contents insurance, $7,500 a year. That is a big bill, isn't it? Now,
It's enormous.
I know. And this area, beautiful area, but there have been a few risks, haven't there?
Yeah, we're bushfire prone.
A lot of insurers reward good safety systems in terms of homes. You've got that here. Others offer smart sensors for your home as well that can help alert you for any fire, water damage and theft. And if you put those in, it can also help to reduce the premium.
Right.
But we ran a few quotes through the Compare the Market database, and by making the switch, you could reduce your premium by nearly $2,900 a year.
Wow. Happy days.
Now, health insurance is the final one. That would be a really sensitive one for you, given Michelle's condition. You're on the really top cover. So you're currently paying about $8,500 in private health insurance.
Yeah.
Health insurance, the base premium is community rated. So that it takes all the risk out of it. So the base rate for Michelle is exactly the same as you, Stephen. So the fact that you might think Michelle's at a higher risk and that's why you need the higher cover doesn't really apply to health insurance. When we look at your cover, it includes a lot of things. And if you're prepared to increase your excess from $250 to $500, that also cuts the premium down too. You could put about $3,600, bit over that, bit over $3,600 back in your pocket.
Wow.
That's enormous, isn't it?
What about waiting periods, Dave?
Really good point. Because this is another misconception of private health insurance. You will not need to reset waiting periods if you switch to the same level of cover or lower.
Right.
And that's not just within your own health insurance provider.
Okay. That takes away a big concern that we had, doesn't it?
It is. Yep.
So go through your insurance policy and work out what you will and won't need. So when you add all of that up, we reckon there's about $8,000 per year extra that you can use to live.
Yep.
That's incredible.
And get on top of your bills.
Right. When do we start?
Sign us up, baby.
Well, thank you for having us.
you.
Hope we've been able to help. And wonderful to see you, Michelle, looking so well.
Thank you so much, and thank you for coming out.
Yep. Loved
It's been
it.
brilliant to meet you.
Michelle and Steve really are a very special couple, and we're so happy we could help them. Now, Michelle and I are both passionate about organ donation. Anyone in Australia aged 16 and over can register on the Australian Organ Donor Register. Remember, it's your decision, not your family's. So you must tell the family about your wishes so they can carry them out. Register through the Medicare app or go to donatelife.gov.au. It just takes 1 minute and you could save a life just like Michelle's. Well, that's it from me for today. I hope you've enjoyed this really special episode of Your Money and Your Life. For all the latest money and investment news that you need to know, go to ymyl.com.au. And while you're there, subscribe to my free email newsletter, which is delivered to your inbox every Friday. Thanks for joining us.